Guys, welcome back to the channel. Thank you for clicking on this video whenever you decided to. I'm Coach UV. This is the Unique Trading Group, and here we focus on market structure, price action. This channel was built for beginners, intermediate, and/or advanced. And tonight I got a very special video for you tonight. This one is going to last for a long time. So if you've been here, if you've been getting value, smash the like button. Why don't you? I'm about to show you exactly why. Because right now the market just told us something. Not with the headlines, not with some talking head on TV guessing, but with positioning, observation, right? That's right, observations, right? Structure, with the actual footprints the institutions are showing us what they left behind. Most of the retail traders, they're never even looking at this data, but I got you covered, okay? Today I'm going to be breaking down the SPY, QQQ. That's right, got to talk about the SPY, got to talk about the Qs. They're all important as well, all right? We got a lot of different type of setups on the chart, and so we want to be wary of that. That's right, the IWM also in the works. IWM for those who like the small caps, right? All right, making some similar patterns. And also want to check out the MDY as well as Tesla, all right? Similar charts, all right? MDY is the mid cap 400, all right? Let's see what Tesla is doing, all right? Tesla has some interesting charts as well. Okay, looking a bit like Apple. Okay, Apple also took a nosedive. All right, took a really big nosedive, and we want to capture these opportunities here. Okay, risk to reward, that's what it's about. These charts are showing risk to reward. Okay, all right, you see the charts in front of you, you see them, they're right in front of you. Okay, what about Amazon? All right, and then we're going to double back to the SPY and give you this game plan that I know you guys have been waiting for. Here's Amazon. All right, Amazon has a major gap up. All right, you want to be weary of some things happening. All right, different charts for different folks. All right, what is the best risk to reward? This is always what you want to be thinking about, because this market is rewarding patience, and this market is rewarding discipline. So I want you to stick with me to the end, because I've got a game plan, not just an opinion. All right, so let's get it. Now, here's the thing about this market. Everybody's out there trading price, all right? I don't necessarily trade the price. I see the price, yes, right? Not some metaphor, right? But I really don't trade the price. I trade structure. Price is just where the auction is happening right now. What I care about is, where does smart money build their position, all right? Where is the most likely the volume happening at, right? Where can I have my confidence to get in? If I can see where they're getting in, I want to get in early. That's the observation, right? The observation. That's what we care about. Where is the thin zone with no liquidity? Now, we have the hour pulled up on the SPY. I want to go to the weekly real quick. I want to show you the macro, a bias, higher time frame. Okay, I want to know the bias of the market and where we're going. All right, we seem pretty bullish even though we had some volatility. And I want to show you this chart to make sure we see the context, see where we're going, how we can actually trade it, right? Entries, exits, right? Whether you're watching this and you're a beginner or not, I'm going to give you this game plan to see where we are. So right now we have the SPY. We have the 21. This gray line is the 21 EMA, as you can see here. It stands for exponential moving average. All right, and we also have the Bollinger Bands, red and green line here. That just gives us an extreme support, which is down here, and resistance, typically where price likes to reject from here and maybe find a place of support and demand to bounce towards the upside. All right, that's what we have on our chart. Now, real quickly, before we get into the meat of the video, it's all about liquidity, and we talked about thin zones on the market. So I wanted to show you that on the weekly, right? Remember, the higher time frame gives us our bias, right? Our directional trades, and we don't like to chase, we like structure. So this resembles a bull flag to me. Okay, this is a bull flag. Okay, all right, here's your pole, and there's your flag. Okay, so you see we have that move here. Okay, I'm going to take that off. All right, now not only do we have a flag, but when the flag happens, right, this is the remarkable thing about a flag. All right, this portion here, all right, this pole here, okay, we're going to circle that. Okay, this is a leg, right? And usually with a bull flag measured move, you have a move that duplicates. And so once price breaks above here, it kind of duplicates that same measurement leg here, okay? And it measures that same leg here. And this move mimics that last one, okay? So we're going to put this circle here, okay? I'm a little off with the lineup, but you get my point right now. Ironically, where are we? We're right here near the Bollinger Bands. Isn't that ironic? Okay? That price is $7.93 on the SPY. So we'll just say $7.90, okay? $7.90 will be the safe space. We'll put $7.90 and we'll make that the red line. Now, you can play this video back, all right? For the next 30 days, this is going to be playing out. And I'm giving you this video at the time between 9 p.m. on the August 2nd, right, 2026. So the next 30 days are going to be a market outlook for you to trade this chart based on this plan. Now, this was a little bit of impromptu, not even a part of my plan for you, but I want you to see things that are working, okay? So we're going to take that away now that we understand that, all right? Look at the other things that we see here, okay? These are strategic trades in uncertain times using the SPY, right? You want to make some consistent money? Trade a stock that you can read, trade a stock that has liquidity, trade a stock that has volume, and also trade a stock that you can see predictable moves that give you that range whenever you're trying to trade, all right? So we have this parallel channel here. Okay, and what you notice from the rip is that we're bouncing here. Okay, this is what you might call a inverse head and shoulders. A inverse head and shoulders is a reversal pattern from price going down to now getting ready to go up. All right, you have an inverse head and shoulders, which is a bullish pattern. Okay, all right, you have that bull flag we talked about, that measured move. All right, you have that. There's two things working with you. We are stacking confluences. All right, also price is above the 21, high probability trade. All right, do I need to show you price above the 21? ATM sound. All right, no matter the risk to reward, obviously this is the big risk. All right, reward, a big reward. All right, even right here when we failed and bounced. All right, back up again. All right, a lot of other different extremes. All right, major fall around the 24th of March. We get above the 21, going ever since. Right, showing strength. I can continue this trend. All right, here's another two right here above the 21. All right, money, $50, $60 moves. All right, above the 21. All right, $20, $30 moves. All right, the moves are there. It's not about if, it's about when, and can you get in position for those moves. And now where are we right now? We are right above the 21. Not only that, we're making what? We're making higher lows. These are elementary patterns. And for those who don't know, to quickly tell you, higher low just means that when price went from here and we went up, came back for some profit taking, the red counters are fear and profit taking, meaning someone's making money from this big move up to take a little profit, but partial. That's why it doesn't fall all the way back down, all right? For now, right? For now, okay? And so price is holding here, and so it made a higher price hold than here because price is higher than this one, okay? You guys with me? All right, so let's make a higher low. And now we're waiting for a structural break. Now, right now, price has closed above, all right, overnight, all right, we have 750, all right, 8, 9, 10, a $3 move. So price is up by $3, right? So that means if we stay above there, 9:30 open, all right, any day of the week, for any chart, any candlestick, any time frame, any day, if the price opens up above the previous close, it's going to be more bullish. Check the volume and define your entry, exit, and your risk, all right? If the price opens up below price, then we see bearish moments, and that's never going to change. And that's what you want to see, okay? You want to see price, and that's what we're doing here. So the next resistance zone is up towards 760. Now this is our framework on the weekly. We see the bias. Now let's go back to the hour. Let's take everything off of our charts, okay? Now this is where things are going to get very interesting, okay? Now, if you remember, we did a video, all right? We did a video a couple of weeks ago, all right? To be more specific, it was the video here, SPY, GRPN, the same story, different day. Well, we're right back at the same story, different day. All right, about a month ago, I put out a video, and ironically, the price is doing the same exact thing right now. And we talked about the SPY making a elementary W shape. Now, you can see this W shape here. It plays on a chart each week. If you can spot out the opportunity, there's the chart here. There's the W. These are the two try failures. All right, the bears try once, okay? They try once, they try twice, they failed to bring price lower, okay? So we continue higher. Now, what's ironic about this is the entry will be above the 21, how we just talked about. There's a trade. Now, we haven't completely finished that W to get all the way to 760, but now you can see that on that weekly time frame, that's the price area that we're trying to get to. All right, so that's why you need a higher time frame in order to see where we're going on a smaller time frame. And so I advise anyone watching right now to wait for a pullback on a smaller time frame. We are a little bit stretched above the 21, and so you want to go to the smaller time frame like the 15 or the 5, and you want to wait for a meaningful pullback before you enter in. All right, and a good entry for that would be right at the point of control, which we talked about. If you hadn't had a chance, check out my volume profile video masterclass that I dropped just a couple weeks ago. All right, volume profile masterclass. If you're new to trading, this will save you years. All right, you need to know an edge, and you need to know what it means to be on the other side. All right, so I wanted to plug that in for you guys. Back to the charts. Again, wait for a perfect pullback. All right, so now this is the options theory with this price. Okay, 21 is here, the point of control is here. That's at 740, 741. This is where I'm waiting for a pullback at. All right, breakout, pullback to that zone, which creates what? A higher low. So I want to try to buy at this area. That's my first point of interest right here at the point of control. And if we fall any further, I'm looking for a what? A measured move, the same way we got this move here, guys. This move here. All right, I want to see that move measured this way. Okay, and so that would take us back to 730. You always want to take symmetry on the chart and find measured moves, and that's all we're doing. It's been working for years. So I want to try to make a light position here if we can hold above the point of control. If we fail, I want to short the market possibly to 730 where the put wall is. That's what you want to understand. Now let's change the chart. All right, because you guys are going to learn these lessons today. All right, so price tells you where we are positioning. Okay, price tells you where we are. All right, but positioning tells you where we're going. Okay, you're looking at where we are, but we want to position so we can know where we're going. Right, it's all about observation. So the options theory, meeting price action, that's what this is. We're meeting risk management all together. 3 legs on one stool. If you take one away, the whole thing falls over. All right, you got to understand that. If you take one away, the whole thing falls over. Smart when you move. You want to focus on the gamma. Now, the question you want to ask yourself is, most traders, they ask, where's price? The full question is, where price and where is the money position? Again, all right, the gamma flip. Take a screenshot, record this, write it down. The gamma flip is the line where the dealer behavior changes. Above it, dealers sell into strength, resistance. Below it, dealers buy into weakness, and it adds fuel down. All right, the pivot point where market's eternal pressure reverses. All right, you also have the call wall and the put wall. All right, call wall, price levels stacked with open calls. As price approaches, dealers sell stock to hedge, creates a ceiling, takes serious volume to break through. This way you create resistance zones when price is coming towards the call wall. And don't worry, I'm going to show you that on the chart. Now you have the put wall. This is heavy put positioning below current price. Dealers buy as we drop toward it. So it creates a floor or a slowdown zone. All right, a speed bump, not a brick wall, but a speed bump. All right. Now, we talked about the thin zones. We've seen that on the chart, and you're going to see it even more, especially on the Apple chart and Tesla. But the thin zones, all right, gaps with little positioning, all right. Price moves fast through them, no friction, no hedging pressure. It's acceleration zones, really, really fast between major levels, all right. That's what you're going to notice on a chart, all right. So that SPY example, all right, using a SPY example, right, because it's the most liquid, which is why we're trading SPY, all right, besides the IWM. But principles hold anywhere options on trading sides. QQQ, IWM, single names, all right, always ask where gamma is stacked at, all right, where is it thin at, where does hedging flip, all right. So I'm gonna show you on the chart. Let's get back to our charts. Of course, you can see that we are almost taken out. We have taken out some of these previous highs around July 2nd. Okay, let's go to the Apple chart. If you guys have been getting any value from this video so far, do me a favor and smash the like button. I appreciate you guys sticking around. If you have been sticking around this long, then I know that I am presenting some of the value. Okay, I have a plethora of videos, playlists for beginners, intermediate, and advanced. So check out those links below. I would appreciate it, and I'm pretty sure your future self would too. Now, we're here on the Apple chart. As you can see here, we have what we call a thin zone. Now, I use the volume profile, which is the fixed range income profile, And like I explained in my masterclass for the volume profile, whenever you see the white line here in the larger blue and pink bar, that's a volume cluster, right? Meaning that's where most of the business happen. You can literally see where the institutions are buying at. It's a bigger bar. That's what it means. That's where most business happen at. Now, is it ironic that price is hovering there or barcoding or ranging? We're finding a base. Buyers and sellers are agreeing on price. Price can now proceed to accelerate towards the upside. Now, this is a 15-minute time frame. We are above the 21 SMA. So more than likely, Apple is trying to fill the gap. But you always want to wait for a pullback. Never chase and never rush. So this is the thin zone because there's no volume like you see here. These bars here, and the thinner and the smaller they get, the thinner the volume gets. As soon as the price breaks above 310 on the Apple chart, we are going to explode towards the upside, towards 320 fairly quickly. It could take 2 to 3 days for that to happen on the Apple chart because it took 3 days for it to drop. So it can go even faster because there's no buyers and sellers in between here. That's the inefficiency in the market. All right. So the point of control is a line of sand and a line in the sand. All right, right here. And you also can see the same things on Tesla. All right. Here's the 15-minute chart on Tesla. Tesla is also up pre-market, post-market, overnight. And Tesla also has a gap. Okay. Same gap, different stop. Same trade. All right. Only difference is Tesla has more volume sitting at 323, which can become a wall if you're not smart. All right. It could become a wall if you're not smart. So I would take off some profits here if you want to play the break of Tesla on a 15-minute time frame. This is a day trade. For the long term, this is a different thing. I would suggest checking the 12-year chart or higher. You want to know where we're going for the long term to invest, all right? And remember, I'm not a financial advisor. I am only a mentor and coach, and this is for educational and entertainment purposes only, all right? And that is my take on Tesla. Now, I want to double back, all right, to the SPY, all right? For you guys to understand gamma, all right? Let's take everything off of the chart. Now, the gamma you can't see here, but you can check out barchart.com, www.barchart.com. You can check out that website. It's going to give you that. You can Google it, right? What is SPY gamma today, right? And it's going to give you the gamma flip, the put wall, and the call wall. I just so happen to know what that is, all right? The put wall was sitting at 730, all right? Meaning this is where puts can happen at, and if it doesn't happen and get past that point, then price is going to continue higher, all right? The call wall is at 750. Well, ironically, we're at that right now. All right. So what does that mean for you? It means the mechanical structural setup right now favors a pullback before continuation, not a reversal, a pullback. Because once you're trading above the gamma flip, the dealers are going to buy the dips. All right. So the gamma flip on SPY is 747, literally where we closed at. So this could be where we could pull back to 747, 745. All right. Remember I said that. All right. So now this is a buy the dip, don't fade the trend structure. And to proven otherwise, this can always work time and time again, no matter what the price is. The same thing is going to happen. It's right in front of you. Like I said before, wait on a pullback. Don't ever chase the price because price is already up now. And so you want to play smart and wait for a pullback on a smaller time frame. Until it's proven otherwise, the level that invalidates this whole thesis is a clean break back below the old put wall, which is 730. Above it, I'm a buyer of pullbacks. Below it, I'm out. And that's it. All right. So now I want to talk about risk management because here's the part that nobody really talks about. All right. It's not sexy at all, but it's the only reason why I'm still doing this 10 years later. Risk. And risk really stands for running into situations knowledgeless. Once you impact yourself with the information, it's going to affect your income. All right. So risk is going to be the most important thing, no matter how good of a trader you are. If you don't understand risk, you can blow an account and you can lose money. And that's something very important. All right. So I don't care how good the setup looks. Like I said, you got to know your risk before you trade. You don't have to trade. You don't have to hope. All right. So here's how I'm thinking about this one. All right, if you're a day trader and you're playing a pullback into the gamma flip zone in the old put wall, your stop is mechanical. All right, so for instance, let's just go to a smaller time frame. All right, now you see price is already above here. All right, so we're already above here now. All right, possibly the 21 can come and catch right by the gamma flip, and we get the pullback here. Okay, that's what we're waiting on. All right, and you have your parallel channel. See here, have your parallel channel. Price goes in between there, right? The way it's doing now, and hopefully we get the same type of move. All right, that's what you're waiting for. You're waiting on that type of move. You got to wait on that pullback towards the 21, towards the gamma flip, which will be 747. 747 is the gamma flip. All right, this is the flip. All right, and you want to try to buy the dip. Period. 747. The call wall is 750. All right. And you also have the put wall. Now these can change. 9:30 open. If you're trading Eastern Standard Time, you always check the data. They can change throughout the day. That just means that you're reading the position of the market. You're welcome. That's what you're doing. All right. So listen, if you're a longer term trader, all right, or you're working with options premium, this is where the premium percentage risk matters more than price risk. All right, because you're not sizing your stop off the underlying. You're sizing it off how much of your premium you're willing to give back. You see what I'm saying? So if your thesis is wrong, it cuts the trade. That protects you from getting shaken out by the noise that doesn't actually break the structure. And so you're going to use 1 bar stops, meaning if you're buying the dip, right, you're buying the dip off of the Bollinger Band or the 21, you're putting your stop 1 bar stop below. I'm going to show you that. All right, 1 bar stop, you enter in here. All right, let's say you want to enter above the 21 right here, put your stop below that bar. Okay. All right, stop didn't get ran, we continue. It's the same with any entry. If you're going to enter above something, you put your stop there. Now I'm going to show you how cool this is, because you see the numbers here, just right here. All right, they took a trade. They say they took a trade with this closing green bar, and they put their stop right above the previous one. All right, how it came back. See how price came back and ran that stop. All right, and then it shot back upward. All right, that's classic move, man. All right, you see this all the time. Breakout pullback. That's what's happening. Running stops. All right, smash that like button. All right. Now we talked about a lot here, and the 30-day game plan is going to be really, really important for you to understand. All right. So this is how I'm approaching the next 30 days across the SPY, QQQ, IWM. This is how I'm approaching it, and I'll let you see this chart. All right. This is the QQQ chart. Okay. We're going to go to the weekly time frame. All right. This is the QQQ chart. Overnight, we're above the 21. Okay. Could we hold? I'm watching for the pullback into structure on this, all the charts. The same charts. I'm watching for that pullback. I need to see that. All right. If it holds above that flip zone, especially on the SPY, all right, because remember, QQQ has the same numbers. You can find the gamma for QQQ. They have a flip, they have a call wall, and they have a put wall as well. But like I said, if it holds above the flip zone, that's my continuation signal. That is the signal, especially on the SPY. All right, that's the signal. We see that already right here on the weekly. We see the structure. Okay, even here on the 1 hour. All right, same thing we just talked about. Okay, same thing we just talked about. And I'm looking for the setups like back in the direction of the trend. So if we lose the old put wall on closing basis, like the next couple of days, we have some data, maybe we'll make with some more earnings, then I'm trying to cut that. All right, I'm closing them up. All right, that thesis is dead. All right, it's done for, and I'm not fighting it. Now the IWM, the small caps, they tend to tell, they tend to be the tell for risk appetite because obviously when you're dealing with IWM, you're dealing with small caps. All right, small caps are relatively cheap stocks. A lot of people pour a lot of money into them, and as you can see here, we are downtrending right now on the 1 hour time frame, but that can change because we're sitting at some structural place of demand, and we have made some sort of higher low, and so it's going to be interesting to see where we are with IWM here. Okay, and we have a balanced B volume profile, so we got to get above 293 convincingly closing price, which is ironically about $6 or $7 away. But in order for us to see any sort of push towards the upside, we got to break and hold above the point of control around 293, and we also have to break this structure here. All right, in order to see some continuation, we got to break that structure. Now let's get back to the SPY because we're going to close here. All right, the market does not care about your opinion. It does not care about mine either. It only respects the structure, right? Risk and discipline. That's what we do here every single week. We read what smart money is actually doing. That's what we do. We read what smart money is actually doing. All right. This is not cookie cutter or guessing. I built this channel years ago for those who really wanted to understand what it was really about and really find a grip on trading and find some real consistency. That's what it's about. And we read that, all right? Not what the headlines are telling us how to feel, all right? If this give you any value and gave you any value, hit the like button. It tells YouTube to put this in front of more traders who need to see it, all right? Subscribe to the channel, the Unique Trading Group. And here's where strategy meets mindset, and of course, discipline meets income. So you don't miss the next week's breakdown. You don't miss the value videos. Drop a comment with every ticker you want me to cover next, and I'll see you guys in the next one. I want you to stay disciplined and trade the structure and not your emotions. All right, until the next time, guys. Peace.